Hi, good week to all. This is Calvin here again. Welcome to this weekly technical outlook on the major stock indices, pardon me, for the week of 27th of September to 1st of October 2021, where I'll be covering the key latest trend bias as well as the key levels to watch from a multi-week perspective on the SPX 500, the Nasdaq 100, the Hong Kong 50, the Japan 225, as well as the German 40 indices. Okay, before we start, let's take a look at the disclaimer slides first. All right. So before we go into the technical chart of the various major stock indices, let's take a look at the raw momentum observation of the breakdown across the globe of the major stock indices that I highlighted over at this table. So that's for last week for the 20th of September to 24th of September versus its prior week and the prior 4-week average. And I also take a look at the similar momentum based on the difference of last week performance minus off its prior 4-week average. So as you know that last week was a kind of pretty dramatic week where at the start of the week, which is last Monday, we start to see a bit of a contingent effect from the China indebted Evergrande major property developer that start to spread to the rest of the world. We start to see we call it a severe decline in the Hang Seng indices, spreading to Europe and as well as spreading to the S&P 500 on last Monday. And very interestingly, on Tuesday itself, the major stock indices across the globe has starts to recover. So we start to see we call it, whoops, pardon me, we start to see positive kind of a slightly positive return on the S&P 500 towards the end of the week, closed up by 0.51%. But however, the higher beta Nasdaq 100 is almost unchanged, negative 0.02%. The Dow Jones Industrial Average has a positive of 0.62. The Russell 2000, which is the small cap stocks, has a return of 0.5% by the end of Friday. So what we could see over here is if we take into account of the prior 4-week average, we start to see you minus off the difference is slightly mixed. All right, I would say that the top performer among the US indices is the Dow Jones, up only 1%, but the rest we start to see pretty much minute performance, 0.55 on the S&P 500, and even the Nasdaq 100 recorded negative 0.43%, and the Russell 2000 is actually down negative 0.33%. So what we could see is more like a mixed bag performance if we take into account of the weekly performance minus its prior 4-week average. In terms of a simple momentum. So what we could see that momentum analysis based on this table that I share with you all, it's more mixed on the major US stock indices, and the one that is underperforming among its peers will be definitely the Hang Seng Index and the Hang Seng Tech Index. So what we could see is more like a double whammy right now. As you all know that in the last 3 months, we did start to see a clamp down on the China private sector that has a kind of a negative feedback loop into China related equities, which is Hang Seng, and the Hang Seng Tech Index is one of them. And adding on to the woes of this negative sentiment or bearish sentiment on this Hang Seng Index, the Hang Seng Tech Index that has been in place since February this year was, this ongoing Evergrande debt crisis. So what we could see is that last week it has dramatically fall again, a negative 2.9% for the Hang Seng Index, and the Hang Seng Tech Index, which comprises of China big tech stocks, which is at negative 4.53%. So all in all, right, if you take into account the difference between the weekly performance and its 4-week average, is still negative 3% for the Hang Seng Index and negative 6.93% on the Hang Seng Tech Index. And after the prior, if you recall 2 weeks ago, we did mention that pardon me, the Nikkei 225, which is the Japan benchmark indices, has managed to break up from its kind of a 3 months of sideways configuration, close to about 10% return, and retest is kind of a 13-year high that was printed in February this year. But if you look at last week, we did mention that we turned bearish because of this overstretch decline and the market overstretch up movement, and we actually played the mean reversion decline actually works out as expected. So last week was actually negative 0.82%, And if we take into account of the difference between last week performance and the 4-week average, is at negative 3.92%. So downside momentum is still pretty much intact. So later I'll share with you what are the key levels to watch, and potentially we may see another we call it a mean reversion decline that may happen on the horizon if certain levels are broken to the downside. And for the German 40 right now, okay, German DAX now is no longer 30, it's 40 right now, and we see a kind of a still pretty much mix of sideway kind of a momentum, okay, whoops, sideway kind of a behavior. Why? Because if you look at last week, 0.27% versus its prior 4-week average is uh, up slightly 0.78%. So no really clear signs of a bearish movement yet, and neither any clear signs of a upside movement. If we take into this raw momentum statistics from last week and compare the prior 4-week average, which is negative 0.51%, and a difference about positive 0.78%. Now, okay, let's have a quick recap of last week performance on the 11 key S&P sectors. If you still recall 2 weeks ago, we see a sea of red for consecutive 2 weeks prior to last week. All the 11 sectors were red, and based on because of the very steep decline that we see on Monday, we managed to see a kind of a mean reversion rebound that actually took shape in one, two, three, four, five, six of the S&P sectors, with the one leading definitely is the energy sector, which is at 4.7%. If you do follow my tweet on a daily basis, which I'll share with you all, for those who do not have my Twitter account or Twitter handle, I actually tweeted do keep a lookout on this WTI crude oil prices, which is 3 weeks ago has started to form at least a medium-term base where we could actually see a kind of multi-week up move sequence, which could actually be positive at least for 1 to 3 weeks for the energy stocks. So it has really started to manifest itself on the S&P 500 energy sector by actually making it the top performer last week. So what is underperforming is still the real estate, the utilities, and the consumer services, communication services, pardon me, as well as the healthcare sector over here. Then now let's take a look at this week kind of a key economic data that I want to highlight for you all is, okay, all these are Singapore time. It will be the US durable goods. Okay, so this is something like a bit of the manufacturing activities in the US. Because as you all know that we did highlight earlier all of this peak growth narrative that start to see globally, where growth indicators has started to actually start since Q1, Q2 this year. So it's pretty much key to take a look at how does the manufacturing activities perform in US. Okay, 8:30 p.m. Out today Monday Singapore time, and also there's this ECB forum on central banking. So they keep so there will be a various what I call banking officials or central bankers speeches. As you all know that as a whole, okay, the global central bankers has more or less been firm up, no longer in favor of adding more liquidity into the system. Rather, they are actually trying to actually remove liquidity from the system. Various bankers has a different approach in doing that. So among the developed nation, the most hawkish right now, what we see right now is Bank of England, who has indicated start of QE this year and as well as start of interest rate hike before 2021 ends. Whereas for the Fed, slightly more dovish, not so hawkish, I would say not so hawkish, is to kickstart QE tightening or tempering, also reduction of the monthly bonds that they purchase per month, which is 120 billion right now. Starting in November, start to withdraw this bond purchase program, so it means ISO liquidity, but they will only kickstart interest rate hike late next year. All right, late next year. All right. So depending on various degree of hawkishness among the central banker, but for sure, very, very less reluctant of adding more liquidity into the system. So it's pretty much interesting to see various views of the central bankers during this forum uh, to Tuesday and Wednesday. Okay, then you have Japanese industrial production on Thursday, and the biggest one we're talking about to actually see whether there's this peak growth narrative intensify will be key manufacturing data as well as non-manufacturing data out from China. So you have the official manufacturing and then manufacturing for September PMIs 9 a.m. Thursday. Then you have the Caixin manufacturing PMI, a slightly different for the official one where because Caixin consists of a survey that involves more SME rather than state-owned enterprise. So that's the main difference. So that's out on 9:45 a.m. on Thursday. So that's the manufacturing PMI for China. Then also signs of inflation as well. Eurozone is have this inflation flash rate data up for September at 5 p.m. on Friday. And most importantly, what we could see is that US itself, that two-thirds of their economy is actually driven by consumer spending. So you have consumer spending and income index, consumer spending and income data for August. And most importantly, this is the inflation data that the Fed is watches closely rather than CPI. They call it the PCE price index that's out 8:30 p.m. on Friday. Then US itself has also a set of manufacturing data. We call it the ISM manufacturing PMI for September at 10 p.m. And the consumer sentiment figure, which is on the preliminary 2 weeks ago, the University of Michigan releases its preliminary data. It's all very lackluster, very weak. So this time around, they have the finalized figure for September out on 10 p.m. on Friday. All right. Then next will be the key company earnings events for this week will be the one that's one of the major semiconductor company will be Micron. It was actually released its Q4 financial year 2021 earnings are on Tuesday after the market close. Then you have CarMax Thursday before the market open. All these are US. McCormick US as well. Thursday before the market open. Then Paycheck is one of these US kind of a payroll HR service provider. Thursday before the market open at Q1 F1 2002. So you can actually maybe keep a lookout on the guidance provided by the management because given themselves they are actually a HR solution provider that could actually allow us to have some light on the current US employment market, which is important as well. Then definitely this is one of the key major Hong Kong property developer. As you all know, that Evergrande itself has started to have a negative spillover effect into property developers in Hong Kong as well in China. And most importantly, recently last week there was actually a statement out from the Chinese authorities stating that the Hong Kong developers ought to actually reduce the current prices that is being kind of a seen in the Hong Kong property market. Why is it so? Because as you know, the Hong Kong property prices is kind of unaffordable for the mass public, and also given Hong Kong actually is part of China, and also this common prosperity agenda that is driven by the top state planners of China right now. So definitely, what they want to do is to actually reduce the property prices in Hong Kong to actually make it more affordable for the main industry. So definitely keep a close watch on this newer development earnings announcement that is out on Thursday after market close to see whether the management has any say on this latest guidance on from Chinese regulators towards Hong Kong property developer in keeping a lid on runaway prices in the Hong Kong property market. Okay, now, so with that, I can't pretty much sum up to the kind of key data to watch out for this week and that raw momentum analysis that I did earlier on. So now, immediately, let's jump to the technical chart, okay, for the previous indices that I share with you all. Okay, so let's go to the CMC platform. Okay, so before we start over here is, okay, let's start with the S&P first. So we start from the daily chart from here. So what we could see over here is this major uptrend since the pandemic low of 23rd of March 2020 based on CMC platform will be at 2185. All right, 2185. So what we could see is still trading a series of higher high and higher low. So what we could see right now is that the medium-term outlook or the medium uptrend that is in place since 29th of January 2021 may has been damaged. Why? Because of the bearish breakdown of the lower boundary of this ascending channel support. As you can see over here, and last week it actually punches below that key 50-day moving average that has kind of kept previous dip since 25th of March. But there was some occasion, especially on this particular day itself, on the 4th of March over here this year, there was one occasion where it actually went down slightly below the 50-day average. It closes below one day before that, one day. Then after that, the next day, it bounces back above it again by this green candle. And subsequently on this period as well, from the 17th of June to 21st of June. But what we could see over here is this time around, it takes a longer time to bounce back. Instead of one day, it actually took 1, 2, 3 days to actually bounce back above or close above the 50-day moving average. Okay, so that could indicate a bit of weakness in terms of technical strength as well, given that previous recapture of the 50-day moving average after the bearish breakdown. Bearish means daily close. It only took 1 day. Okay, on here, 21st of June, pardon me, this year, and as well as this period of time, 5th of March this year, and 1st of February. Okay, and if you look at the momentum indicator, which is the daily RSI, the daily RSI has already broken below a key corresponding support that actually held previous dips since the low of 27th of Feb. All right, from here, previously it actually held, then now it actually break down. And now actually is retesting this significant corresponding support level, now turns into a pullback resistance at around the 53% level. So what it means that it also indicate to us that the downside momentum, which is the daily RSI actually measures the medium term downside momentum, is also weakening as well. So with that, right, last week, still recall that we have this 4380 key support level. It was still holding on Monday Asia time. So at that point in time, we were pretty much cautious of the outlook because there's some technical elements that I did highlight in my previous video. So last week, actually, it has a daily close below 4380, which is it happened on this day itself, which is Monday. It closed at 4354. So with that, right, I would not want to be so bullish again. Yeah, even though it actually managed to recapture the 4380 level towards the end of last week. So right now it's actually based on Asia time zone. It's trading at 4473. Okay, this candle itself. So let's go to the 4-hour chart, right, to jump into the technical outlook or technical strategy that we have for this week. All right. So this is a 4-hour chart. So one thing I want to highlight for you is take a look at this rebound over here. Okay. So this particular rebound, right, since the start, which is last Monday low, all the way until now. So yeah, this rebound it actually managed to recapture the 50-day moving average. Like I highlighted earlier, it takes 3 days to recapture, which is slightly weak. Okay, relatively weak versus the prior recapturing episode that I highlighted earlier on. Okay, the last 3 episodes. So what's interesting over here is that the way it actually rebound, right, it took on the shape of an impending bearish ascending wedge, which is actually characterized by a series of higher lows, but the slope of the higher lows is much steeper than the slope of the higher heights. Okay, so that actually indicate a bit of weakness as well. So with that, right, we call that as a impending bearish ascending wedge. That means this rebound is rather more corrective in nature, rather than impulsive, where we start to see potential new heights or all-time high for the S&P 500. So with that, right, what we do over here is that the pullback channels resistance of this 5th of March low now turns into a pullback channel resistance of the former support now turns to 4500 figure level, which was also the previous we call it support level over here, turns into a pullback resistance, and as well as the former congestion high from 13th of September all the way to 17th of September prior to Monday's steep decline. All right, and also if we could draw the Fibo retracement of the prior decline, it actually closed to at 71.6%. Right? And your daily 4-hour RSI is all coming close to the extreme overbought zone, which is 75% and 78% level. So with that, right, we actually have a bearish view for this week on the S&P 500, definitely with 4500 level as my key medium term pivotal resistance, and the trigger level will be at 4438, which is the lower boundary of this bearish ascending wedge or the ascending wedge support. So a break below 4438 level. Okay, let me remove this. 4438 level will actually reinforce the start of another potential corrective down leg to retest 4305, which was last Monday's low, and below it shall see the next support at 4230. So on the other hand, a daily close above 4500 will invalidate this corrective down move, and we may start to see another impulsive up move. That means an up move to potentially take out its recent all-time high area, which is at 4540, and even much higher to the next Fibo expansion cluster level, which is the next resistance zone at 4630/60. Okay, now moving on, next will be the Nasdaq 100. So the Nasdaq 100, as you know, is a higher beta indices versus the S&P. Why? Because it consists of all the growth stocks, the FANG stocks, as well as the technology stocks. There's a higher weightage. So I want to highlight for you firstly is yes, it managed to bounce off from this prior swing low area of 18th of August and 27th of July, which says 14,780. And also managed to close back above the 50-day moving average. But during this period, if you look at over here, is that there's a clear bearish divergence. All right, from here, we start to see higher high in prices, but lower highs in the RSI oscillator. That means what it means that the momentum, yes, even though stock prices or the prices of Nasdaq 100 keep on moving up, showing higher high, but all this move here is being categorized by a weak momentum instead. Okay, by this bearish divergence that was seen on the daily RSI oscillator. So what it means that, i.e., this potential rebound, yeah, this rebound from 1478 maybe just only a corrective bounce. Okay, given the higher time frame of this daily RSI that is flashing this bearish divergence. All right, so definitely the key support level, right, to actually maintain this kind of a long-term major uptrend since the low of 20th of March 2020 will be the support level at 14,040, which was this former major upside trigger level that has been taken out on 14th of June this year, and also the 200-day moving average, the key long-term 200-day moving average in orange. So what we could see, i.e., it means that yes, we may start to see a corrective decline potentially, but as long as this 1440 didn't break, right, the risk to actually has a change or a potential major trend reversal of this upside major upside phase that is in place since 23rd of March 2020 low is still remote at this juncture. That means, i.e., in terms of fractal analysis, right, what we're saying that yes, even though we start to see bearish move this week, it could be just a multi-week corrective decline within a major uptrend phase that is still intact. Okay. All right. So that's my take that I have for you from a shorter, from a medium term to a longer term perspective. Now, moving on to the 4-hour chart, that's the strategy for this week. So what we could see over here is, yes, there's a channel breakdown as well from the shorter term, which is from the 13th of May, pardon me, 13th of May 2021 low. Okay, this previously there is ascending channel broken down on last Monday, and now there's this pullback of the channel that is coming in, I think, as a resistance around this level. Let me draw this line for you. Okay, at around 15,440. Okay, so that's a pullback resistance. So what we have is that if you look at, interestingly, from the rebound that was seen last Monday's low, right, it also took on the form of a bearish ascending wedge, very similar to the RSI, very similar to the price action that S&P I shared with you. The magnitude of the higher low is more than the magnitude of the higher high. All right. So what we could see is, yes, this is a bearish phenomenon or the bearish observation in terms of chart patterns. Okay, so what we could see is, i.e., the rebound is more corrective in nature. So definitely I need to have a level for me to validate my bearish view. Will be this 15,550, which is this former congestion zone from 13th of September to 17th of September before the steep slide that we see on Monday. Okay, and also if you look at the Fibo retracement, let me draw for you. Yeah, so roughly about 76.4%. Right, so as long as this level holds, it did have a daily close above it at 15,550. A break below the ascending wedge support level, which is at 15. Okay, let me remove this, which is at 15,275, will reinforce another potential corrective down leg to retest last Monday's low, which is at 14,820/14,780 that I highlighted on the daily chart a while ago. Breaking below this level should take us down to the next support at 14,480. And nevertheless, on the flip side, a daily close above 15,550 will invalidate this corrective bearish decline view, where the Nasdaq 100 may resume its impulsive up move for higher highs and even break new highs to retest 15,700 current all-time high, and the next Fibo cluster level, expression cluster level, which is at 15,990/16,090. Okay. Now, on the Hong Kong 50, pardon me. So Hong Kong 50 returned neutral last week. So what we could see, right, since the start of this corrective decline since 18th of Feb this year, okay, it's been down by more than 20%. So if you look at this scenario over here, okay, okay, 23% or 24%. So if you look at the longer term picture, right, I show you the weekly chart, right? Okay, before that, you look at the weekly chart right now. Why we turned neutral last week? Because okay, number one, yeah, definitely it's bearish. It broke below this ascending channel from the March low this year. So what it means that this move here, this major uptrend move that we see in March all the way to February has been destroyed. Okay, more or less been destroyed. That means we are no longer in a major uptrend, more at risk of a sideways choppy formation or at risk of an extension of this corrective decline towards 21480 and 21 yeah towards 21480 and okay this is wrong this 18 this is let me change this okay, this should be 18,050. All right, okay. So why we are still neutral instead of playing a further down move because the price action actually stored at this 24,000. So what is 24,000? Right, it's very important. Graphically, is the long-term circular ascending trend line from the Great Financial Crisis low that was October 2008. Previously, this 2015 sell-off managed to store right at this ascending trend line support. So still call what causes this steep fall in 2015 was number one, due to the sudden shock Chinese yuan devaluation, where PBOC devalued yen for three times, and it causes the spillover effect to Hong Kong stock as well. And during this period, 2018 was also pretty much lackluster over here. It's caused by the U.S. trade war with China, and as well as some internal risks in Hong Kong itself due to the Hong Kong street protests at the point in time. So that was the negative sentiment. And also what's interesting over here is that this is the pandemic low, which actually bounces off from this long-term circular trend line support. Okay, managed supply. And right now, it actually retest this level again. So that's explained why we actually turned neutral last week instead of playing an outright bearish movement towards 21480. And nevertheless, the next big support right will be at 18,050 level, which is this major swing low area of Jan 2016 and as well as May 2012, and also very close to this higher super cycle ascending trend line support from 1998 low. So that was the Asia financial crisis low. Okay, at that point in time. So with that in mind, right, we are actually approaching a kind of significant support level. So we turn neutral. Okay, last week it didn't break below this support level. We turn neutral, slightly below it, which is at 23,500 level from an intraday basis. Okay, so what we have over here is a neutral between 23,500 and 24,750. So what we could see over here, right, this corrective decline from February high, it could be take on the form of a very messy expanding wedge formation as depicted by these gray lines over here. Okay, expanding wedge. That means we start to see the magnitude of the higher high, okay, the magnitude of this high, pardon me, and the magnitude of the lower low starts to widen off like a crocodile mouth. Okay, so it's a very highly volatile movement on the Hong Kong 50 itself. Okay, so unless we have a break below 23,500, then we could validate a further down move in first step towards for this week to 22,090 slash 21,745, which is a cluster of Fibo expansion level, okay, as drawn over here. Okay, nevertheless, if it still remains within this level, and also if we have a 4-hour close above 24,750, then we could validate a push up back towards the top of this range resistance that was formed previously on 11th of August to 7th of August at this zone of 26,750 slash 27,000. So no change, still maintain that neutrality stance on the Hong Kong 50 index. All right. So now moving on to the next Asia indices I'd like to highlight will be the Nikkei 225 or the Japan 225 that we call in our platform. Okay. So Japan 225. So still recall that Japan 225 there was this very steep bullish breakout from this expanding which kind of corrective decline that took shape since 16th of Feb this year. That was also the 13 or 14-year high on the Nikkei 225 at 13,760. So what we could see right now is actually a kind of a consolidation phase. after retesting the February high again on 14th of September, and it started to consolidate. And the pullback support will definitely be the 200-day moving average, and as well as this pullback support of this expanding which consolidation that was formed previously now acting as a support as well as around 28,880. You could see that the RSI also turning downwards after hitting this extreme overbought level at 81%, and it still shows room for potential downside maneuver. Over here, there's this gap for it to maneuver before hitting corresponding key support at the 45% level. Okay, then what we have for the strategy for last week, okay, so we call it last week, our strategy is no change. We're still expecting a kind of a bearish movement below 13,760 as my key medium-term pivotal resistance. And we have an immediate resistance at 13,031 30,000, pardon me, 13,310, which was actually tested on last Friday. So it kind of a pre-test this level. And what's interesting over here since Monday low, so that was the first support that we have, 29,600 slash 470, which was met last week, last Monday. And it managed to goes into a kind of a pullback, a rebound that is also a bearish ascending wedge that we highlighted. This is more clear, much more clear. Why? Because the slope of the higher high is much lesser than the slope of the higher low. Okay, so also a kind of impending bearish ascending wedge formation that was seen on the Japan 225. Okay, and the one this is more obvious is the 4-hour RSI. The 4-hour RSI starts to shape this bearish divergence. Yeah, we start to see this one here, higher high on price action. Okay, but your 4-hour RSI is not showing higher high, similar high. Okay, can you see? So what it means that this move here, this up move from Monday's low, last Monday's low, has been accompanied by a very weakening momentum. Okay, as indicated by the RSI, forward RSI, and also indicated by the bearish ascending wedge that is forming right now since the low on Monday. So, i.e., what it means that we could actually see another potential down leg that is unfolding in the picture right now. Okay, so what we could do over here is we will still maintain this bearish outlook view. So what we have here is, okay, let me add in the intermediate support level of this here will be this swing low. Okay, over here, so it's the 30,055. Okay, which is the ascending wedge support as well that we see at the bearish as a support. So if we have a break below 30,055, we could actually reinforce this corrective bearish outlook view to actually retest the last Monday swing low area at 29,600 slash 470 before taking another potential downslide to actually hit this next support level at 28,860. All right, so that is the bearish corrective view that is still pretty much intact on the Japan 225. But nevertheless, on the other hand, a daily close above 30,716 will actually invalidate this corrective decline view, where we start to see the resumption of its impulsive up move to actually target the next resistance at 31,680. Okay. Now, going on to the German 30 index. So, the German 30 or German 40, pardon me, I did highlight is that over the weekend we had this German federal election. In my tweet earlier, I did highlight. Let me show you where to find my tweet. There's a Twitter, my Twitter handle. I did highlight that the outgoing German Chancellor Merkel, her party has narrowly lost to the other camp. Okay, the more centralist Democrat camp itself. So what you could see now is just only a slight majority loss. Okay, so potentially that could be still a bit of, because it's still preliminary results, so there could be a bit of horse trading going on among parties. But for sure, we know that there's no clear majority that managed to gain a pie of this German federal election. That means in order for the opposite camp to rule, the centralist camp to rule, it got to actually negotiate a coalition. Okay, a coalition party. So, but nevertheless, what we could see, the technical chart of this German 40 index has more or less kind of a rather lackluster. Okay, since the movement of 3rd of May. Yeah, it's been trading higher high, but this higher high, right, it's been more like a very congestion zone. No clear signs that it started to fall on Monday. Last Monday, managed to help this 200-day moving average. And also very clearly, right, if you look at the RSI, right, the daily RSI start to post this very clear stacking bearish divergence since 15th of April. Okay. from here. So what we could see is that a bit of lack of upside momentum as well. Okay, uh, we are not saying that it got to crash from here. That is breaking below 14,800 and 14,200, right? Where we start to say that this major uptrend since the low of 19 March 2020, the pandemic low has been reversed to the downside. What we could see now is more like a sideways formation, perhaps to kind of retest 14,800 again. So let's take a look at the strategy chart on the 4 hour for the German 40. So what we could see that previously last week we have a target. We turned bearish last week during my Asia session video that I published last week. So 15,050 was the first support, followed by definitely 14,800, which is the 200-day moving average as well as this range swing low over here. 13th of May and 7th of May swing low, 14,800. So what we could see is that where it actually paused, right, that rebound itself actually retreated right off at our predefined medium-term pivotal support that we highlighted last week, which is 15,770. So no change. We still definitely keep this 15,770 as a key level because due to the way it reacted off last week by forming a 4-hour shooting star on last Friday. So definitely this is a key level to watch, okay, to maintain that bearish view that we have. So as long as this level still holds 15,770, we still maintain that bearish corrective decline view for it to retest 15,550, a break below 15,550, where last Friday rebound started. May take us down to last Monday's swing low area at 15,050, then thereafter for the next support at 14,800 level. RSI still at this key corresponding resistance at around the 63% level as shown on the 4-hour RSI. So nevertheless, a daily close above 15,770 will actually invalidate this corrective decline for it to take up much higher towards 16,070 slash 16,200. All right. So with that, I've covered most ground on the global major stock indices. So just have a recap. Right now, what we are seeing now is a potential corrective decline move that is to be in continuation of last Monday's fall, but we don't see this major uptrend that is in shape since last year March pandemic low to be reversed to the downside yet. That means, i.e., after this corrective decline is over, there could be another potential impulsive up move from here. All right. Then with that, definitely those key medium-term pivotal resistance that are highlighted for this week, if you have a daily close above it, definitely we start to say that all this expected bearish corrective decline has been invalidated. Then we will start to see a resumption of these impulsive up moves, respectively, to continue higher highs. Okay, so with that, have a great trading week ahead for this week, and I see you all again in my next video. So before I go, I'll share with you all where to find my Twitter. So you can why this Twitter is pretty much interesting and important is because I tweet every morning. That means before Asia session open, that means around 8:30 to 9:30. I tweet what is the recap of last night US session as well as key news and key economic data and events to watch out for. So it's like a morning brief to kickstart every morning. How to follow me? You just open a Twitter account. Then you just find me at once you open a Twitter, register a Twitter account is free. You can click at Kelvin SC Wong. All right. So what you get over here is a stream of a tweet every morning that I highlight to you all, as you could see this kind of tweet over here. All right. And for those who want to know what will happen or what will likely happen in Q4 this year, I have this upcoming Q4 global markets outlook where I cover the global indices, FX, as well as this time around I'll touch on Ethereum and Bitcoin because it's pretty much there's some pretty interesting move as well as gold and as well as WTI crude. So you could actually register from here, okay? You click on this link, you can register on here. So first and foremost, sign up for a Twitter account and follow me on Twitter to find out more latest market update for you to kickstart every morning in every trading day. Okay, so with that, have a great trading week ahead, and I see you all again in my next video. Thank you.